The goal of this lecture is to help you understand the difference between data and information and how it relates to decision making. Let's start with data. Data are simply facts, things that represent actions, people, places, objects, and so forth. The number 42 is a fact. By itself, the number 42 doesn't tell us really anything until we apply other data to it and provide context for it. So information is data in context. So the number 42, this piece of data that we have right here, could mean a bunch of different things. Think for a moment, what could the number 42 mean to you? I have a couple of thoughts. The number 42 could be someone's age. It could be a dollar value, either the price of a good that we're selling or cost. It could be the number of units that we sold. It could also be something more specific, like say it's the number of a jersey, like Jackie Robinson's jersey number. It could be the number of fish that we have in an aquarium. If you're a Douglas Adams fan, you know that 42 is the ultimate answer to life, the universe, and everything. So given some context, we can now figure out what this data means to us. And so taking data, these facts, and turning it into information by providing context leads us to something that we call the information value chain. The information value chain tells us how we get from a need or an event or something that generates data to ultimately making a decision. So let's take a quick look here. In the information value chain, we start with a need for data in order to answer a question, or we have some sort of event that generates the data. So an example of a need for data would be that I need to understand how profitable I am. An event that generates data would be a sales transaction that collects data about the transaction amount, the quantity, the customer, and so forth. Think of the need or event as the question we're trying to answer. The need or event generate data. These, once again, are the facts that describe what's going on. Once we have data, data combined with other data becomes information, which provides the context for that data and tells us what it means. Information then turns into knowledge. Knowledge is where we take that and we try and derive meaning for it. So we apply judgment. Is that number good or bad? Does it represent an increase or decrease relative to something else? So we're combining information with other information to perform an analysis. And then finally we get to our ultimate decision. The decision is where we take action and we decide whether to buy or sell something, whether to make an investment decision. The information value chain will lead us to that decision point. Let's look at this in terms of an example. So let's say I have a need. I want to buy a new car. All right, in order to do this, I need to collect some data about this new car. For example, I want to know what the price of the new car is. I may want to know what types of features it has. Other relevant data may be, what is my income level? Because that will affect whether I can afford a certain car or not. Now I use that data to generate information. The price is going to help me determine my monthly payment. When I combine that price with the terms, with the interest rate, and other pieces of data. The features, I may find that a key feature is missing from the specific car that I'm looking for. I may look at my income and determine that my income is sufficient to purchase a car at the moment. Now that we have this information, we want to apply some judgment to this to gain some knowledge. For example, we may look at our sufficient income and the monthly payment and determine that this is good, meaning we could afford to pay for this car payment and buy this car. If we look at the features and we determine that a key feature is missing, this may be a deal breaker for us. So now given this knowledge, we're going to take these two and apply them together to make a decision. I may say, yeah, I could afford this car, but it's really missing this key feature that I really want, so I am going to not buy the car. Let's look at one more example. I have a need to take accounting information systems. Data related to the accounting information systems, well, it's taught by Professor Teeter. It's given at 2 o'clock in the afternoon. Professor Teeter has brown hair. Okay, these are all facts. Now we're going to provide some context. I'm going to look at Professor Teeter, and I'm going to calculate a rating score for Professor Teeter. I may collect a lot of data from other places, like Rate My Professors or student evaluations, and so forth. I'm going to look at the time of 2 o'clock and decide that this fits in my schedule. I have an available slot at 2 o'clock. The fact that Professor Teeter has brown hair really shouldn't impact my decision. So I'm going to decide that this is irrelevant to my decision. Now that we take that information, we're going to apply some meaning to it. Now that I know Professor Teeter's rating, the way that I've evaluated this, I'm going to decide that, he might be okay. The 2 o'clock fits, so that's a good thing too, because I might as well take it this semester as opposed to another semester or a different section. And we skip the brown hair thing because it doesn't matter. So now that we know that these are two okay criteria, we're going to decide I'm going to take my AIS course for Professor Teeter. Again, we use the value chain to apply to different decisions. Think for a moment about a decision or a need that you've experienced and how each of these steps of the value chain may apply to it. Once you've done that, let's move on to the next topic. When is information useful for decision making? In order for information to be useful, it has to fit into two criteria. One is it has to be relevant. Relevant means it makes a difference when we make a decision. And two, it has to be reliable, meaning that it is faithfully represented. It accurately reflects what's going on. In order for information to be relevant, it fits three criteria. First, it has to be timely. That means the information is available when I need it, and we receive it in time for it to impact a decision. A recent financial statement will be much more timely in an investment decision than a financial statement from 5 years ago. It also has to have predictive value, meaning the information can help predict future activity. If I talk to a fellow student about taking a specific professor's class, and that student has similar study habits to myself, then I may rely on their opinion about the professor, because I would likely have a similar outcome to this fellow student. It also has to have feedback value, meaning that it confirms or corrects information about the past. In order for information to be reliable, it must be verifiable, meaning that I could compare this data with another person or another outside party, and we would get the same conclusion. So if I'm talking to fellow students about a professor, one student would say something, another student would say the same thing, another student would confirm that same information. If these three are in consensus, then that information is verifiable. It has to have representational faithfulness. And this means it reports what actually happened. So financial statements would have to accurately report the economic activity for the company. And finally, in order for information to be reliable, it must be neutral, meaning that it is free from bias. If we look at a website like Rate My Professors, Rate My Professors provides a lot of feedback from students about their experiences in classes. Would you say that Rate My Professors is neutral? Probably not, because this isn't a case of self-selection bias, if you remember from your statistics course. Essentially, people that go to provide feedback on their own generally tend to be people who have very positive or very negative experiences. And more often than not, it's negative experiences. So looking at those ratings may provide more information than having no information, but you have to be aware that it may be biased. Just like a professional website for a professor is going to show all of the good things that professor has done, while suppressing a complete picture about that professor. So we look at these relevant and reliable information help us determine whether information will be useful in helping us make that decision. Think about a decision that you have made recently. What are some of the ways that the inputs that you made for that decision, so all the data and information that you collected, was timely, had predictive value, had feedback value, was verifiable, had representational faithfulness, and was free from bias? If there are issues with some of that information, you want to make sure that you gather additional data so that you can make the best decision possible.